The Argentina dollar bonds plunging the most in 3 years. That's after a provincial election is now threatening to undermine President Javier Milei's national economic agenda.
The Trump team keeps pointing to record stock highs and trade wins, but behind the headlines, the dollar's footing is slipping. The Argentina bailout lays that bare. Washington is pouring billions into an economy on life support, not because Argentina drives U.S. growth, but because Scott Bessent's Treasury is desperate to keep control of the one lever that still scares rivals: the dollar. Argentina's economy runs on dollars, and it's in deep trouble. If Washington steps back, Buenos Aires will rush to find another lifeline and speed up its move away from the greenback. That's the risk, one high-profile crack that encourages others to follow. While Washington hands out emergency dollar lifelines, swap lines, currency support, quick fixes, Beijing is building things that last. China is adding to its gold holdings, locking down lithium in the triangle, and wiring itself into clean energy supply chains from mines to refineries to gigafactories. Each move tightens China's grip on the inputs that power the next economy. The more the U.S. leans on short-term relief, the more countries holding dollars hedge their bets. If confidence in the currency keeps fading, the toolbox in Washington gets lighter, while Beijing shows up with metal in the vault, contracts for critical minerals, and an industrial base that sells to the world without relying on American demand. This isn't a story about one country in South America. It goes to the core of U.S. power: what backs it, who trusts it, and how quickly that trust can erode. Stay with me as we break this down step by step. And before we go deeper, make sure you subscribe, because this timeline is accelerating and you'll want each update as it lands. What's unfolding in Argentina right now is more than just another peso meltdown. It's become a test of U.S. power under Donald Trump, and Washington's response reveals how fragile that power looks when put under pressure. The peso has plunged once again. The central bank has burned through more than $1 billion trying to slow the collapse, and President Javier Milei is running out of lifelines. In the middle of that storm, Washington decided to step in. The reaction itself is curious. Argentina is not a major economy, and its role in global trade is small. At the same time, Trump is clashing with more than 150 countries through tariffs. His administration is bending over backward to rescue Buenos Aires.
I don't think Argentina is strategically critical to us in Latin America. I think Brazil is the other side of this story, and that may be part of this support.
Treasury Secretary Scott Bessent quickly announced that the U.S. would provide swap lines, buy Argentine currency, and even involve the Federal Reserve if necessary. Markets jumped on the signal. Within 48 hours, Argentine stocks plunged by 10%, then bounced back 8% the moment Washington offered support. To the casual observer, it looked like America had just stabilized a struggling ally. But beneath the surface, the story is different. Argentina is not a country whose economy the U.S. depends on. Its peso has lost 99% of its value over the past decade. Its debt record is one of the worst in the world. Trade between Argentina and the U.S. is limited. In strictly financial terms, rescuing Buenos Aires makes little sense. The real reason lies elsewhere: protecting the dollar itself. Officials in Washington worry that Milei might abandon his dollarization push if things get worse. Even more troubling for them, he could turn to Beijing for help. China is already Argentina's largest trading partner, and the two countries have been expanding ties. A yuan swap line could keep Argentine imports moving, giving Beijing more leverage in South America. That's the nightmare scenario for the Trump administration: a dollar-dependent economy quietly shifting toward China's orbit. So instead of making a calculated financial call, Washington is spending dollars to buy loyalty. It's less about saving Argentina and more about signaling that the dollar still matters. The problem is that this looks less like confidence and more like desperation, a scramble to hold on to the currency's role as the last pillar of American power. To understand why Washington is reacting the way it is, we need to zoom out and look at the dollar itself. For decades, the greenback carried a reputation for stability. Investors could buy U.S. assets without a second thought, confident that whatever happened in the markets, the currency would hold its ground. That trust was the foundation of American financial power. But that foundation is now eroding. Deutsche Bank reports that more than 80% of the new money flowing into U.S. stocks is being hedged against the dollar. Think about what that means. Investors still want exposure to Apple, Microsoft, and other American giants, but they no longer want to sit on the dollar while doing it. They buy the stock, then immediately take out insurance by shorting the currency with futures and options. It protects them from a falling dollar, but in the process, it adds constant pressure on the currency itself. This creates a strange disconnect. On the surface, the stock market looks strong, hitting record highs. But underneath, the dollar is weakening. And in the bond market, cracks are spreading. Demand for U.S. government debt is slipping. That leaves the possibility of yields climbing even as the Federal Reserve tries to cut rates. For any economy, that's a dangerous combination. Paper wealth rising while the core pillars of currency and debt start to shake. It's within this fragile environment that Washington jumped in to rescue Argentina. The bailout is less about Buenos Aires and more about preserving an image. The dollar still works. The dollar is still trusted. The dollar is still the backbone of the system. But the very need to prove it tells the opposite story. If the currency were truly solid, there would be no need to constantly reinforce confidence. And here's the key shift. Since Trump returned to office, the majority of new flows into American assets come with dollar protection attached. Investors still bet on U.S. companies, but they no longer bet on the U.S. currency. That kind of separation didn't exist in past decades. If this pattern continues, the dollar isn't just set to weaken. It risks a structural unraveling that no quick bailout or swap line will be able to reverse. So why Argentina? Why not let its crisis run its course and save resources for more strategic fronts? The answer lies beneath the deserts and mountains of the Andes. Together with Chile and Bolivia, Argentina forms what is often called the Lithium Triangle, a region that holds nearly half of the world's lithium reserves. And lithium isn't just another commodity. It's the backbone of electric vehicle batteries, renewable energy storage, and even advanced chips. Whoever shapes the lithium supply chain will shape the future of clean technology. For Washington, Argentina offers a chance to lock in influence over this resource. By keeping Buenos Aires tied to the dollar, U.S. officials hope to secure favorable access for American companies, developing mines, building partnerships, and carving out supply chains that bypass Chinese control. On paper, it looks like a smart play. But in practice, the U.S. is arriving late. China has already invested heavily across South America, Africa, and Asia, setting records for new mining deals. And it's not just about digging lithium out of the ground. Chinese firms dominate refining and processing, the stages that turn raw material into something manufacturers can actually use. Even if Washington secures ground in Argentina, it would still be years behind Beijing's integrated system of mines, refineries, and factories. Instead of developing its own industrial base, the Trump administration is betting on financial tools, swap lines, bailouts, and the promise of dollar stability. The assumption is that by dollarizing Argentina, influence over lithium will naturally follow. But while Washington leans on financial leverage, Beijing is laying down physical infrastructure, smelters, processing plants, and entire supply chains that cannot be undone with a policy change. The contrast couldn't be sharper. Washington is extending lifelines to keep Argentina in the dollar orbit, while China is laying the groundwork for the industries that will drive the next century. One move buys time, the other secures the future. And Beijing isn't stopping with lithium. It's also reinforcing its position with something even more enduring. Beijing is anchoring its financial strategy in something solid: gold. For more than a year, the People's Bank of China has been steadily adding to its reserves. Official figures put holdings at just over 2,300 tons, but many analysts believe the true number could be nearly twice that. The timing matters. The yuan has strengthened by about 3% against the dollar this year, making gold imports cheaper for China. Beijing used that window to loosen restrictions, giving banks, institutions, and even ordinary citizens easier access to buy gold. The result has been a nationwide surge in demand. Gold bars, coins, and jewelry are flying off shelves, while shipments from London and Swiss vaults are being redirected east to meet the appetite. But Beijing isn't just stacking reserves. it's building control over the entire supply chain. Companies like Zijin Mining aren't only importing gold, they're expanding abroad with major new projects. Zijin is now preparing a $3.2 billion IPO in Hong Kong, the largest of the year, to fuel global expansion. At the same time, China's domestic production exceeds 380 tons annually, making it the world's top gold producer ahead of Russia and Australia. By comparison, U.S. production is tiny. This dual dominance, on both the demand and the supply sides, gives China a powerful position. If the dollar continues to lose ground, gold becomes a safety net for the yuan. It provides stability against shocks and could serve as the backbone of a financial system less dependent on Washington. And when the time is right, Beijing could revalue its gold holdings and present an alternative currency framework backed by tangible assets. In Washington, the focus stays fixed on market highs and short-term rallies. In Beijing, the priority is securing lasting wealth and building leverage for the decades ahead. That contrast grows sharper every day, and it doesn't stop at gold. Argentina is only the opening act. Across the world, more and more countries are shifting parts of their trade away from the dollar. In the Middle East, oil exporters are testing contracts in alternative currencies. Russia, cut off from Western systems, has already rerouted nearly all of its trade into non-dollar channels. Even India, a nation Washington often hopes will balance China's rise, is experimenting with imports priced outside the dollar system. These are not isolated deals. Together, they reflect something deeper, a global decline in trust. And trust is the foundation of any reserve currency. Instead of reinforcing that trust by stabilizing policies and strengthening alliances, Trump has turned the dollar into a blunt weapon. Sanctions, threats, and transactional deals have replaced the steady hand that once gave partners confidence. The outcome is predictable. Country by country, trade is being structured in other currencies. Each contract outside the dollar is not just a business decision, it's a statement that America's leadership is no longer reliable. And once those alternatives are built, they rarely disappear. Energy is another pressure point. Trump often highlights energy dominance, pointing to record oil production, pipelines, and promises of cheap American fuel. But in the 21st century, dominance is no longer defined by crude. It comes from control over the materials and technologies that power modern economies. And on that front, the U.S. is falling behind. This is why Argentina's lithium matters so much. Lithium and other rare earths are at the heart of batteries, wind turbines, smartphones, and even advanced fighter jets. Yet Washington has done little to rebuild mining or refining capacity at home. Decades of neglect created a gap, and under Trump, that gap has widened further. While Beijing invests in refining plants, battery gigafactories, and rare earth processing, America continues to pour focus into oil pipelines, an industry of the past rather than the future. By clinging to yesterday's model, Washington risks locking itself into the role of buyer, not supplier, in the technologies that will define the next global order. The rest of the world is building the next energy system while the U.S. defends the old one. The weaknesses are out in the open now, visible in markets, in supply chains, and in the choices of America's own partners. Every day, the dollar's role slips a little further, and once that trust is gone, it rarely comes back. The real question isn't whether the system is cracking. It's how fast it unravels, and who is ready to take America's place when it does. Stay tuned for the next update, and don't forget to subscribe and turn on notifications. See you in the next one.